markets, I mean, right there, no real change. 113 odd points lower is what we have, 11,343. The bank nifty is down 1.25, and we've got mid-cap and small-cap indices down. I mean, actually, the mid-cap index is down 0.6. Small-cap index is down a lot more, down about 1.25%. The weakness in equity markets is showing up in commodities as well. Metals, we take that as an example, and we've seen some price pullback coming through on underlying commodities. Manisha is here, as always, to take stock of what's happening in the world of commodities. Manisha, morning.
Thank you so much for that, Prashant. As you can see on your screens, we have seen a decline across metals, and the crude oil prices are down 3% from their 4-month highs that we were trading in the previous week. And today in Asia, we have seen more pressure come in for equities, for currencies, and many of those commodities as well. And as you pointed out, it really is coming in from the global cues, the macro data that is. The PMI numbers from US are the lowest in 21 months. The Europe numbers as well have continued to decline. The Germany has seen decline in PMI numbers for a third straight month, and at this biggest contraction, or the fastest pace in contraction that we have seen in last 6 years. So everywhere that you look, the economic data does not look so good, and that clearly is weighing on. In metals, it also has to do with the Indonesia and China now looking to put tariffs on steel products from each other's countries. So that's yet again another dampener in the sentiment, and we've seen that as well weaving its way into the prices. So as you can see, 0.5% of decline is what we have seen for most of these metals. Just to tell you that copper prices fell nearly 2% on Friday, and they have posted the biggest weekly decline in last 3 months for that one metal. And the other all metals actually saw declines in the previous week and have started Asia on a weaker note as well. Paul Bartholomew of S&P Global Platts now joins us to talk further about that. Paul, hi, thank you. What we've seen on Friday and how Monday morning Asia has opened on a weaker note for the metal prices, it has to do with the weak economic data. It also has to do with the trade tariffs continuing. It also has to do with the strength in US dollar. How are you picking up all of these fundamentals, and what is the impact that you see on these prices?
Yeah, hi. It's yes, I think the market's just a bit lackluster at the moment. I think it's sort of mainly due to a fairly sort of subdued Chinese market and Chinese demand. So I think people sort of were maybe hoping for some more sort of maybe some bigger announcements around stimulus and stuff from the recent National Party Congress in Beijing. The main thing to come out of it really was the announcement of the VAT cut on April the 1st, which we could see actually sort of kind of pulling down commodity prices a little bit if buyers think that the producers cost base is going to come down a bit. That might add a bit more pressure onto sort of metals prices, at least in the near term until the market adjusts to it.
So, until now, we've seen all of these metals actually hold in the positive for 2019 until now. The expectation really has been that as the US and China trade talks continue well, as we get into the second quarter of this calendar year, which is a stronger seasonal demand period, things actually could start looking better. Do you see that come in, or with the kind of data now that we are faced with, much of that euphoria really seems to be phasing out?
Yeah, it's always quite a bit difficult looking at the data, particularly sort of January and February. China often reports January and February data together, and there's the China New Year, Lunar New Year impact when everything goes a bit quiet. So it's really sort of coming into Q2 where we will get a better sense of perhaps how the rest of the year is going to sort of pan out. But as you said, we're coming into a seasonally stronger period. We should see some. We still see, reasonable strength in the property market in China. I mean, it's not as much as it was this time last year, but it's still enough to keep, metals prices, steel prices, raw materials prices at reasonable levels. And if construction sort of picks up with the warmer weather, then we could see a stronger period. We just had that cyclone in Western Australia as well. That sort of tightened up a little bit of supply, but the market are telling us that they can rely on port stocks in China for the time being. So it sort of hasn't made sort of too much of a difference. But yeah, I mean, Q2 is normally a strong period, and some of the sort of stimulus measures, some of the support for consumer segments, for infrastructure should start bearing some fruit in Q2, which could have a positive impact on metals prices.
So how do you see this quarter then closing? Because we're just a week away from this quarter ending. We are still in the positive. Would you look at a repeat performance in the metal space for the next quarter as well, or are we getting into a profit-taking mode?
I don't see Q2 any reason why it should be weaker than the current quarter. I mean, you know, as we always see, China does have a propensity to sort of surprise and often on the upside. I think unless you know, the VAT impact sort of, you know, acts as a bit of a drag on prices, but it should also, you know, act as a kind of a bit of a stimulus around, you know, transportation, manufacturing, and some of those areas. So I think, you know, Q2 should be up on the current quarter.
Mm-hmm. Okay, all right, Manisha as well as Paul, thank you very much for joining in and taking us through that perspective. Well, we need to take a break now with the news that we do have metal stocks which are under pressure, so down around 2.5% for Hindalco, Vedanta and JSW Steel, also under pressure, down around 2.5% to almost 3% for those stocks as well. We'll take a break, but up next we'll get you more stocks in focus as well as some more perspective on the market. Stay tuned.